Good morning to all of you.
Good morning.
Welcome to our class today. Okay, so we pick from where we left yesterday. Okay. And yesterday, we just have a simple recap of what we were discussing. We say that at the end of the day, okay, what matters is the control system that you put in place. Okay, it ought to have the support of sorry, it ought to have the support. It ought to have the support of all the different levels of employees. Okay, all the way from the top executive, okay, to the bottom members of staff. Okay, so you need to have support of everyone. Okay, and I think I mentioned that at the end of the day, what matters is what does what we call the tone at the top. Okay, what does the management, okay, deems of the internal control system. Okay, do they think internal control system is, okay, let's say, a bottleneck to them, okay, to do things. Okay, how do they perceive? Okay, that's a better term to use. How do they perceive of the internal control system? Okay, is it there, okay, to prevent them doing things? Okay, because if they deem it, if they look at it from a negative point of view, then quite unlikely that the internal control system will achieve its objective. Okay, so of course, therefore, the tone at the top is what really matters. Okay, of course, definitely it matters even to the bottom level employees, but it's more towards the top or the executive. Okay, if they are not going to be supporting the system, then quite likely the system will not work. Okay, we had said the key objective of having the internal control system is more towards the prevention, detection, and the correction. Okay, I think let's put it down in writing. The key purpose or the key objective of having the internal control system. Let me get my writing area. Where is it? Here it is. Okay, so the key purpose or the key objective, okay, of having the internal control system, okay, it is said, is more towards the prevention, okay, detection, okay, and correction of misstatements, okay, and correction of misstatements or financial statement misstatement, financial, okay, statements, misstatements. Okay, prevention, okay, an example could be the control that you put in place. Okay, for example, authorization. Okay, we give an example, like if, for example, we have bank account, okay, that the entity needs not any person, not any employees within the entity ought to be able to withdraw money from the company account. Okay, they need to be people who are going to be authorizing, or they're going to be people who are going to be signatory, okay, towards that bank account, and they are the only one who should be able to withdraw money from the account. Okay, so that control in itself, it's meant to prevent, okay, any potential loss of money from unauthorized withdrawals. Okay, so it's a prevention measure. Okay, however, if the misstatement do occur, okay, by a misstatement, by the way, misstatement here we mean an error. Okay, there's going to be, okay, in quote, the mistake, errors, okay, or there could be what called the fraud. Okay, error, it's unintentional. Okay, the term here, error, is unintentional. Okay, it occurs, and it is not that the person who was behind that mistake, okay, that misstatement, did it intentionally. No, it was unintentional. Okay, for example, when recording the payment to the employer, to maybe supplier, okay, the payment was meant to be, or the invoice value, okay, the invoice value on the invoice amount, this is just an example, was, let's say, and 10. Okay. However, when the employee was recording, okay, when the cost or the accountant was recording, they recorded as, let's say, 1100. Okay, not that it was intentional. However, it was just by a mistake that they did that. Okay, this is referred to as an error. Okay, it is an intentional misstatement, an intentional, okay, mistake. I'll call that way. Okay, then fraud is intentionally done. Okay, this is intentional. Okay, the person behind that particular misstatement does it intentionally. They know what they're doing. Okay, so they does it intentionally. For example, okay, they know the invoice amount. Okay, is 1010. For example, you just one I've just mentioned here. Okay, but knowingly, okay, instead of posting, okay, with the knowledge, okay, 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 they does it with the knowledge. Okay, they know what they're doing. Okay, so what they do is that when posting this amount, instead of posting 1010, okay, there's a correct amount. Okay, they post the invoice value to be equal to 10,010. Okay, it's very intentional. Okay, they does it knowingly. Okay, they know that the amount was 1010, they posted 10,010. So what they can do, for example, they want to pocket the difference here. Okay, so because the company will be forced to go to pay $10,010. Okay, however, the correct amount was meant to be, okay, $1,010. Okay, so in case it is the does or the person behind the perpetrator, okay, the person behind this particular fraud, if they knew what they were doing, okay, that's what we call, therefore, that's what we refer to as a fraud. Okay, those called the misstatements here. Okay, anyway, going back to the key objective of the internal control system, okay, we are saying about prevention, detection. Now, if the misstatement has occurred, okay, the internal control system ought to be able to detect that particular fraud, or ought to detect that particular error. Okay, for example, one of the control, okay, we normally put when it comes to, for example, cash, okay, is the bank reconciliation. Okay, we call a bank reconciliation. Bank reconciliation, what happens is that the company, of course, most of the time, okay, they have the bulk part of their money, okay, in the bank account. Okay, and of course, definitely they also be having money in cash. Okay, for example, to be able to pay for petty cash. Okay, to be able to pay for their needs that do require cash payments. Okay, so they also be having money in bank account and money in cash. Of course, the company cash should come from the bank account. At the end of the week, for example, you may want to make a reconciliation. Okay, this is the amount I have at hand, and this is the amount I have at bank. Okay, you want to make a reconciliation. At the beginning of the week or the beginning of the month, okay, the bank balance was 10,000. Just an example. Okay, we withdrew. Okay, the amount withdrawn from the account was, for example, 1,000. Okay, which means therefore the bank balance or the draw was the difference, which is 9,000. Okay, now at the end of the month, if there was no, assume that there was no any money in and out of the bank account, okay, the company will be using this 1,000, okay, throughout the month. Okay, paying employees, paying for petty cash, okay, paying for petty expenses. Okay, so you want to make a reconciliation. What the money do we have at hand? Okay, we have the money we have at hand is we had 1,000. Okay, what the balance we have now? The amount remaining is 200. Okay, the amount remaining is equal to 200. Okay, so you may want to make a reconciliation of the cash you have at hand. Where is 800? Okay, answer that question. Where could be the 800? Okay, so if, for example, you can't trace the amount you can only trace is, let's say, 650, then you may want to have you may want to ask yourself a question: where is the 150? Because the amount, the balance here, okay, we ought to get 800. However, the only amount you can go to exactly tell where it is 650. Okay, so where is the difference of 150? Okay. Now, if we don't do reconciliation, you can't be able to tell the difference. You can't be able to ask these questions. Okay. Now, but in case you do make the reconciliation, then it becomes easy to trace where there could be misstatement, there could be fraud. Okay. Maybe this money was lost. Maybe that money has been used by someone else. Okay. Then maybe there's a mistake. Okay. But essentially, by having the control system, it will make it easy to identify areas where there could be fraud occurring. Okay. And that's what we said here. The element of detection comes in, the objective of the internal control. Okay. Now, if the system, the internal control system, can detect and tell that 150 has been stolen by the accountant. Okay, just an example. It is the accountant who stole this money. Okay, now what's the next step? We need to correct that. Okay, there need to be correction. One of the way, for example, is the accountant can be asked, hey, where is the $150? Okay, if you cannot explain, then you need to tell us where. Either you pay the company or you in quote you get fired. Okay, the system need to be able to what is going to happen. Okay, so either the accountant will be asked, okay, hey, you need to refer the company the $150, or if it's something is, I don't know, the company policy, okay, to fire any person caught in fraud cases, then that has to follow. Okay, this particular person who was caught in a fraud case will be fired therefore. Okay, they need to be that particular, this internal control system need to have all those three elements. Okay, to prevent, okay, to detect if it happens, and of course to correct in case it has been discovered. Okay, so that was what we were discussing yesterday. Okay, of our key concern, don't forget, are the financial statement. The controls, don't forget, they go beyond the financial statement. Okay, for example, having a guard at the company main office, okay, in itself is a control, but is not a financial statement control. It has no impact on the way the company is preparing the financial statement. So the key concern is, are those controls that have an impact on the financial statement. Okay, I think we went ahead and gave a number of examples, okay, through the group discussion that we had yesterday. Okay, and that's what we were discussing yesterday. Okay. In this today, I want us to discuss on the double entry. Okay, don't forget, I'm not going to teach you double entry in detail. Okay, because that's more towards the side of accounting. Okay, which I think you've already done. Okay, okay. So double entry. Now double entry, don't forget, you have to account for example the cost. Okay, for example, we pay the employee who are involved in making of the commodity. Okay, we as Unilever, we have employees who are employed to manufacture Omo. Okay, so at the end of the day, we want to determine how much costs we have incurred in making, for example, 1 kg of Omo. Okay, so there need to be accounting of the cost we incurred, the purchase of raw material, paying for the employees, okay, transport costs that we have incurred to when delivering the commodity to the customer. Okay, so all those costs need to be accounted for. Okay, and of course, the basic principle in accounting, okay, is what we call the double entry system. Okay, the debit and the credit entries. Okay. And you normally see that every financial transaction, not the non-financial, but financial transaction, they do have the two sides of it. Okay, there's a debit entry and there's going to be a credit entry. Okay, there'll be a debit and there'll be a credit. Generally, okay, you must follow a very simple rule. Okay, I don't know whether you've been taught that in accounting. Okay, a very simple rule of accounting. Okay, is if we are in the case of, okay, we normally say that we debit, okay, all expenses. Okay, so in case you have expenses, okay, then if there's going to be an increase in expense, then of course you debit. If there's a decrease, of course you credit. Okay, so debit, expenses, assets. Okay, if you be having assets, okay, assets is what you own. You own a motor vehicle. Okay, you're going to increase. You're going to buy more motor vehicle, so there's going to be a debit entry. So debit. You debit expenses and you credit, you debit expenses, okay, and also debit assets if they are increasing. Okay, so you debit assets and you debit expenses. Okay, okay, hope that's clear. Now for the entries, okay, now you credit. What do you credit? Okay, you're going to credit, okay, liabilities, okay. You credit liabilities. So in case there's some you owe, okay, here you have a supplier who has supplied you with raw material. You are yet to pay them. Okay, therefore the entry will be a credit because this is you owe people money. This is a liability. Okay, if it's about income, okay, if it's about income, you also if it's an income, an increase in the income, okay, you have made a sale of commodity. Okay, therefore how do you what's the entry? It will be a credit. Okay, it is going to be a credit entry. Okay. And of course, in case it's going to be a capital account, okay, by capital account means that you are injecting more money into the business. For example, you as the owner, you are injecting more money into the business, okay? So therefore, that's going to therefore be a credit entry. If you're going to be injecting more money in the business, what we call equity capital. Okay, that's a simple rule normally follow, okay, when it comes to the accounting, okay? So debit expenses, okay, but here D, this is, okay, with debit expenses, E here, I mean expenses, okay, and of course A here, it means assets, okay, in this case, okay, you credit, okay, liabilities, okay, income, okay, and of course capital accounts. Okay, capital accounts. This is more towards the equity. Okay, the amount you are investing yourself as the owner of the business. Once you know that, then of course accounting becomes very easy. Okay, the account becomes very easy once you know the double entry system. Okay, clear? Okay, seems that you already knew this. Okay, but that's good. Okay, so debit entries in ledger books, if case there gave an increase in assets or expenses, okay, as mentioned, as I've already mentioned, that in the case of expenses, the case of assets, okay, if they are increasing, okay, then what do? We're going to therefore make debit entries. Okay, if they're decreasing, of course, the opposite, they'll be credit entries. Okay. Then, in the case of liabilities and income and even a capital, as I've mentioned, okay, if they're increasing, then of course we are going to be putting a credit entry into the individual account. Okay, so in case the amount we owe our supplier is increasing because you have bought more material, then of course you're going to be putting credit entry into the account. Okay, if it's about the income, you made a sale of commodity, and we are expecting, or we have actually received money from the customer, then you're going to be putting a credit entry in our income account. Okay. In case there'll be assets, I think I've already mentioned, if the assets and credit are decreasing, then of course we are going to be crediting the account. Okay, the individual asset account and the individual expense account. Okay, that's the basic accounting, the basic principle that you're going to be using all over. Okay, for the entire account, for the entire course of accounting, that's is what you're making reference to. Okay, the double entry system. Question? Okay, great. So more often than not, what normally happens is that we prepare what we call the T account. Okay, of course we can also follow what we call the columnar way of the column. Okay, it's called the columnar way of trying to make the presentation. But most of the time, the T accounts are the normal one that are used when it comes to preparing or posting the accounting entry or the double entry system. Okay, so this is a simple T account. Okay, as you can see, it appears like a T. That's called a T account. Okay, but as I mentioned, don't forget, it's not a must to be a T account. Okay, it can be in a column way, provided you know that if it's an asset account, okay, the debit entry is going to be a plus. Okay, the credit entry will be a minus. Okay, let me just to illustrate what I mean by that. Okay, as mentioned, generally you can use a T account. Okay, okay. In case this is an asset account, okay, and maybe you've bought a motor vehicle, therefore this side is called debit entry. This is called the credit entry. Okay, we have bought a motor vehicle, therefore the amount you're going to report here. Let me say you bought through this is motor vehicle account. Let me call it motor vehicle account. Motor vehicle account. So you bought it using cash. Okay, therefore that's going to be the credit entry here. Okay. Now, don't forget, this is a cash. You're paid the motor vehicle using cash. So you can have another account here. Okay, simple account for cash. Okay, as I mentioned, every financial transaction has the two sides, both credit and debit. Okay, this is the debit side. Okay, the credit, okay, comes here, motor vehicle account. Okay, you bought, for example, 10,000. Okay, let me just put figure here. Okay, 10,000. Okay, they will get the transaction we have here has both the credit and the debit. Okay, this is the debit side, this is the credit side. Okay, if for example you do make a sale of motor vehicle, okay, maybe this is too old for the company. So what do? You make a sale. Okay, so you made a sale of motor vehicle. So you have received money from the disposal of that motor vehicle. The same thing, cash. Okay, how much was the amount you disposed the asset for? 5,000. Okay, as you can see, the asset is decreasing. That's why you have put as a credit entry. Now here, cash is increasing because you received money. Okay, so therefore, the other side of the account entry for it to be therefore motor vehicle. How much have you received? 5,000. Okay, so definitely every financial transaction must have the two. Okay, it must have both the debit entry and credit entry. Okay, if there's no account, it should not be hanging in quote. Okay, it ought not to be hanging at all. Okay. Now, as mentioned, generally, you can also present the same, okay, using columns or the columnar way, okay. So you can call this motor vehicle account, okay. So here you can see we bought the motor vehicle using cash, okay, at 10,000, okay. These are debits, these are positive. However, we made a disposal, okay, of the motor vehicle. We received cash, okay, cash. Let me call this cash on the disposal. This is minus, don't forget, minus 5,000 because this is a credit entry, okay. Therefore, the balance you can see of the asset is 5,000. Okay, the same can be here cash account. Okay, we can have here we have received money. Okay, or here we have spent money. Okay, motor vehicle. We call this motor vehicle purchase. Motor vehicle purchase. Okay, we bought motor vehicle for 10,000. So this is a cash decrease because the credit entry here is a negative. Okay, however, we have received money from the disposal of the motor vehicle. Okay, we call motor vehicle disposal. And received 5,000. This is a debit, so it's a positive. Okay, positive 5,000. The balance here on the cash, therefore, is negative 5,000, for example. Okay. Suppose, therefore, that is a very simple entry. Okay. So you can either present them using T account or use of the columnar way of making the presentation. Okay, whatever you want to present. At the end of the day, it's the same thing. There's no any difference at all. Okay. Clear? Question? Okay, great. Okay, so the use of T accounts, okay, as I mentioned, is the oldest way of making the presentation, okay, making the presentation of the entries that of the financial transaction, okay, to reflect both the debit side of it and the credit side of the transaction, okay. So the use of T account is the oldest way, okay, but whatever you want to present the account using, it will be the same, okay. So examples. If, for example, we do make a sale of goods, okay. If, for example, we do make a sale of goods, okay, you mentioned you could be receiving money, okay. So therefore, you're going to either debit cash if the sale was made on cash, okay, or you're going to debit the bank if the customer has paid through the bank, okay. Don't forget you made a sale, therefore your income is increasing. What do you mean? Therefore, you're going to credit the sales income. Okay, because you made a sale, therefore the sale account is increasing. Okay, this is an income account. Okay, therefore we do put a credit. Okay, credit entry in our sales account. Okay, if, for example, we made a sale to a customer on credit. Okay, that means therefore the customer did not pay on cash basis. Okay, we made a sale on credit. Once now we receive the money, okay, don't forget the original entry. Let me ask, because since you have not been asking question, I think you just had the accounting. Now here, let me ask. Don't forget here, this is a receipt of cash, okay, from a sale that was made on credit, okay, a sale that was made on credit. Now, since, let me just write down here. So on first, let me give an example. So on 1st of September, okay, 2020, okay, the company has made a sale on credit. Okay, now on that first, let's say a month later, 1st of October, the customer has paid the money. Okay, and that's the entry you're making. So this is a receipt of cash from the credit sale. Okay, from the receivable. Okay. Okay, this is from receivable. And you see that the entry you're going to make there, okay, you're going to debit, you are receiving the money now, okay, debit cash or the bank, okay, and you're going to credit the receivable because the receivable is decreasing. Okay. Yes, Ishmael.
Sir, your screen seems to be blurry.
Okay, and let me confirm from other people. Confirm from their fellow classmates. Aisha, how is my screen?
It's blurry.
Hey, okay, what's happening today?
So your screen is clear.
It's clear. No, I guess maybe it could be the internet issue from maybe from your side. I don't know what I can do now.
Possibly.
Yeah, my guess. I think Ian was telling me the same problem, but it's more towards the internet issue. Oh, okay. I don't know. I'm not sure what you can do now. I'll try to have my writing a bit. Okay, the font to be a bit higher so that even if it's blurry, you can still see. Okay. Okay, so this is a sale. So as mentioned, so 1st of October, okay, you receive the money. So the entry is you receive money, so debit cash. Don't forget this is an asset account money, you own it, okay. However, this is the amount you used to own, but however now the customer is paying you. So going forward, they won't be they won't owe you. Therefore, that's why it is a credit entry. Now the question is, okay, when you made the sales on credit on 1st of September, okay, what is the debit? What is the credit? Because here, don't forget to make a sale. This is a financial transaction which you made, okay, on 1st of September, okay. So what are the entries you're going to put here? Sorry. You can answer. You don't have to wait for me to pick you out. Hannah.
Could you please repeat the question?
On 1st of September, the company made a sale. So assume they make, what do they sell? They sell motor vehicle tires, okay? So on 1st of September, okay, the company has made a sale, and the sale was on credit, not on cash, okay. Therefore, the customer is meant to pay on the 1st of October, okay, on 1st of the October, okay. So on the 1st of September, what will be the entries to be made in the company's book? What is the debit and what's the credit side of that transaction? The sale made on credit. Hannah, you get it?
Yes.
Okay. So what should be the debit? What will be the credit?
You debit sales and credit receivables.
Sales, credit, receivables.
No, you debit sales and credit receivable. No, you debit sales and credit receivables.
Okay, we have done it here. Debit sales, credit receivable.
Yes.
Okay, and is it true?
Pardon?
Is it true the way Hannah has showed us, the way debit sales, credit receivable?
I would like to think so.
Okay, let me check. Christine?
Yes.
What do you think? Is it correct?
I think it's correct.
Ian, what do you think?
Sir, I'll be honest, I don't know.
Okay. Let me get someone else. Yes, Talu. Can you come to class, Talu?
Is this? I'm having a question. Is this a credit sale?
Yes, it's a sale made on credit.
I think we debit the receivables and then credit the sales.
You credit the sales, and that's the entry. Okay, that's the entry. You're going to, okay, the entry should be debit receivable. You have reverse Hannah, and you credit sales. As mentioned, don't forget, if the sales are increasing, because you made a sale, your sales are increasing, okay? And if you remember, you have to, I don't know whether you're going to, you have to know this. If you don't know, then accounting is going to be very tough for you. You have to know that, okay? Debits, expenses, and asset if they are increasing, okay? You credit liability, income, and capital accounts, okay? So that one you have to know, okay? I hope that, because either way, otherwise the account will be very tough for you. Okay, if you don't know the double entry system. Okay, so you have to get to know of that. Okay, and ask question if you're not so sure. Okay, ask question. Okay, that's why, as I mentioned, that's why you come to class. Okay, and someone else is reading on their own. Okay, so get the best of the class. Anyway, don't forget here you made a sale, and this is a sale. This is an income you'll be saving. Okay, this is an income. Okay, you're meant to receive. Okay, when the customer of course pays you money. Okay, that's where you're going to credit sale. Okay, so this is an income account. It is increasing. Okay, therefore credit sales. Asset, look at here. This is a receivable. You're yet to receive the money. You're going to receive it maybe on first of October. Okay, therefore this customer who bought goods from us on credit, they owe us money. It's our asset that they owe us. Okay, we have given them our goods on credit. Therefore, we debit the receivable. Receivable, you are expecting to receive. Okay, the core receivable. Okay, is an asset. Okay, it is increasing. Okay, that's why therefore you're going to have to be debiting with an asset account. Is that clear? Ian, because you are the same issue. Is it clear, Ian?
Yeah, now it's clear. I was thinking about the reversal, but I was shook.
Okay. Don't forget you have to be quite careful with the account. Otherwise, by the way, that's the first thing. If you understand that, then of course accounting will be going to be tough, very easy for you. If you can't understand that, then you'll have a very rough time in accounting. So you get to understand all that. Okay, now you can see now, definitely once you see the money, let me just go back to, okay. Now on 1st October, once you see the money, what do? You have the money at hand now. Therefore, debit the cash. That's what you can see. Therefore, we have here debit with the cash. However, the amount the customer is owing you has decreased. Okay, money. They have paid you money. Okay, that's what you can see. Therefore, we are crediting now the account. Okay, so you can see therefore is more or less like the reverse. We debit cash because you have received money from the customer. Okay, because they have paid money to us. However, the amount now they owe us has decreased. That's what you can see. Therefore, this is a credit entry. Clear? Okay.
Sherehe naitaki hasira. Si ngoma mlenikani.
Then purchase of material, the same process. Okay, the purchase of material. Okay, and let me actually get someone here. Okay, purchase of material, and assume the material purchased on cash. Let me begin there. Okay, so on 1st of September, you have made, yes, Ishmael.
Yes, sir. Please, maybe could you reduce your pace?
Oh, my pace. Okay.
Yeah.
Okay. Okay. But you understood, or you have a question?
Maybe Joshua usually has a problem with his internet, so he was asking you to repeat the DA and click
I repeat on where?
in the chat box. Check your chat box.
Okay. Let me see it. And by the way, most of the time, I normally don't check chat box that often. So if you can go to raise your hand up, the easier it is for me. So, okay, DEA and the D and the click, okay? Let me just go back there, okay? So what that means is, okay, this is just like, can I say an acronym sort of, okay? The D here represent debit, okay? The C here represent credit entries, okay? So it's about the increase, okay? So in case the expense account, E here represent expense, A represent assets, L represent liability, okay? Liability means what other people owe you, what you owe other people, okay? I is the income, okay? And C is the capital account, okay? So if the expense account is increasing, you debit. If the asset account is increasing, you debit, okay? The first year. Then C represents credit entries, okay? If the liability, the amount you owe other people is increasing, then you credit. If the income is increasing, okay, you're making income, you're making sales, for example, okay? Therefore, you're going to credit that because this is an income account, for example, sales, okay? Whether on cash or on credit, okay? If you inject more capital, okay, you're going to be investing more to your business as shareholders, then how the company account for it, okay? It's going to therefore be a credit entry because you're giving more money to the company, okay? For example, okay, Let me give you an example on equity account. Okay, it's out of context, but let me just give an example on a capital account. Capital account, one of them is equity. Equity is the money that you are giving to your business, okay, or you are investing in the business, okay, an equity account, okay. If, for example, you're going to be injecting capital, the business, the tune of, let's say, $1 million, okay, it means the company has received cash worth 1 million, okay, to facilitate its growth, okay. So therefore, how does the company account for it, okay? We are saying that this is an equity account, therefore, we're going to then call this is an equity account, okay, or capital account, okay. So this is a capital account, therefore going to credit it because the amount the company is receiving from you towards the capital amount is increasing, but they're receiving money. Therefore, you're going to in form of cash. So $1 million, okay, is a credit entry. Then don't forget this is a financial transaction. Therefore, the other arm of the transaction will be cash. The company cash is increasing. They receive money from you as the owner of the business, okay? Therefore, the debit side of it, okay, will be the equity or the capital. Let me call this capital account. Okay, how much? $1 million. Okay. Here. Okay. Now going back to what we were discussing here about the purchase of raw material. Okay. You are Omo, and one of your key raw material is oil. Okay, still that's the case. Okay, so purchase of raw material, purchase of raw material. Purchase of raw material. Okay, as I mentioned, okay, if you're making this is raw material, is going to be an asset of the company, raw material, because once you buy this oil, you own that oil, okay? You as Unilever who are making Omo, okay? So you purchase raw material, okay? And assuming this purchase was on cash, okay? It was on cash, okay? Now the question is, on the books of the company on the 1st of September, what will be therefore going to be the debit and what will be the credit? You're purchasing raw material on credit. Okay, what will be the entry? The account entry you should put here. Alexander.
Yes, Mister.
Okay, so you got the concept of the scenario. The scenario here is that you have purchased raw material, okay? You are Toyota Kenya, okay? One of your raw material are the tires. Let me give you an example, okay? So you use tires. So you bought raw material, bought tires, okay, to put into these vehicles, okay? Therefore, the question is, how do we account for that transaction, the purchase of raw material, tires, on cash? Okay, what is the entry?
The entry, first you open the tires account.
Okay, raw material account. Okay, fair enough.
Yeah. Yeah, you can draw them as I speak. You draw you make it's double accounting. So first you purchase them by cash. Yes. So you draw the raw materials account and then the cash account.
Material account. Okay, cash account here. Okay, go ahead.
Yes. So now, since purchases have increased on the raw materials, you debit the raw materials account.
You debit the material. You have paid through cash. Great. Okay. And so you have paid 1,000. Okay.
Yes.
Okay.
And on the cash, you I'm not so sure, but on cash, because it's revenue decrease.
What is that?
I mean, it's an expense. It's an expense.
Yes, it is an expense. Yes.
Yeah. So on cash, you debit.
You debit cash.
Yes.
Okay. Don't forget, cash is an asset, not an expense, because you own the cash. It is. You own the cash. Okay. The money in your pocket is yours. It's your asset, isn't it?
Yes.
Is the cash increasing or decreasing?
It's decreasing.
So do we debit or do we credit?
You credit.
You credit.
You
yes.
credit.
Yes. Okay. So yeah, therefore you can say this is raw material purchases. Okay, raw material purchases of 100,000. Yes, you credit. And that's the entry. Okay, that's the entry.
Thank you so much.
Okay, thank you. Okay, that's the entry. Okay, so the question is that you ask yourself, what is increasing, what is decreasing? Okay, it's simple as that. What is increasing, what is decreasing? Okay, Caroline.
Yes.
Mm,
I didn't get why we are crediting the raw
material.
material.
Okay,
Yeah.
don't forget raw material. Okay, if you're going to, don't forget, you purchase raw material so that it can be used to convert to get. Okay, as I mentioned, you are maybe Unilever, so you have bought oil to make Omo. Okay, so that oil you're going to be buying, okay, to make Omo. Okay, where do you put it? Okay, don't forget the oil itself. Okay, is an expense because it's going more towards an expense. Okay, is more towards an expense, isn't it? Okay, what do you mean therefore? What is happening to our expense account? What is happening to our expense? Is it increasing or decreasing? Okay, it is increasing, is it? Correct.
Yeah. Yes.
Therefore, if the expense is increasing, do we debit or do we credit?
We credit.
No, remember the account DEA. Debit.
Oh, yeah, we debit.
Expense. You debit the expense account, which you have done here. Okay, debit the expense account, which you have done here, isn't it?
Yeah.
Okay, on the other side, you bought on cash, isn't it? You paid through cash. Okay. Now the next question is that what is happening to the cash account? Is it increasing or decreasing?
It's
Is your money in the
decreasing.
pocket increasing or decreasing?
Decreasing.
It is decreasing. Okay, don't forget here, we say that if the asset was increasing, we debit, isn't it?
Yeah.
But now it is decreasing. So then what do we do?
We debit.
Don't forget.
We credit.
We credit. Don't forget, we debit if the asset is increasing. But now the cash is decreasing. Therefore, we do the reverse, the opposite. In short, therefore, we credit, isn't it?
Yeah, I get it.
Yeah, that's why you can see the account like that.
Thank you.
Okay, great. Now assume, okay, let's make an assumption that the material were bought on credit, okay, not on cash, but on credit, okay. So this material here, okay, were bought not on cash, but on credit, okay. So 1st of September, okay, raw material purchases. Material purchases on credit, were bought on credit. That means therefore, assume that you pay them on 1st of October, okay, 2020. Now we want to get the entry on 1st of September. Okay, what will be the entry? You bought raw material, okay, on 1st of September, not on cash, but on credit. That means therefore you're going to be paying later on. The question is, what will be the entries here? Marvin. Marvin.
Yes, Chair.
Yeah. Marvin, we can't hear you.
Pardon.
The issue is that you bought raw material on 1st of September. The materials were bought on credit. They were bought on credit. Okay, you get it?
Yes.
Okay. The question is, please give me the entry of the transaction. What will be the debit? What will be the credit?
Okay. Excuse me, sorry, like, but I can't hear you well.
Hey, okay. What's happening, Marvin? We can hear you and hear you well.
Pardon again, one more.
So on 1st of September, the company made a purchase of raw material on credit. You heard there?
Yes.
The question is, how do you account for that purchase that was made on credit on the 1st of September, what will be the debit entry? What will be the credit entry?
So if because the raw materials have increased,
yes,
you will debit, and because the cash has reduced.
No, don't forget here, you're purchasing credit, not cash, credit.
On credit.
Yes, I agree. The first entry is very correct. Let me write it down. Therefore, debit, raw material, expense account. I agree. That's great. Credit?
Also, you have purchased on credit.
Yes.
So you'll have a you will debit, though you'll have a credit account.
Credit account. Sorry, you have what? You have
a credit account. A credit account, though you'll debit.
How do you no? You have done the debit already, isn't it, Marvin?
Yes. Yes.
So you can't debit again.
No. Will credit.
Okay, what will you credit?
The raw materials.
No, you've already done the debit of raw material.
Oh, purchases. You'll credit purchases because you have purchased on credit.
Okay, credit purchases. Okay, you can do so, but now, okay. Okay, let's see from Hannah. Maybe she has a better idea. Let's see from Hannah. Yes, Hannah.
You debit the materials.
Sorry, you debit material.
And then you credit the payables.
Payables, great. Yes, that's the term I was looking for. You credit the payables, okay? Or you can call it the supplier's account. Okay, supplier's account. Okay, if supplier is ABC company, then you can call it, you credit ABC company. Great, that's good. Okay, you're going therefore to credit the payables account. Now you owe someone else money. Okay, if you remember, I said that, what do you call it, click here. Okay, since the liability, the amount we owe the people is increasing, what do? We credit, and that's what we've done here. Okay, we owe that supplier. Okay, we owe that supplier money. Okay, we as Unilever, we owe Bidco the oil that you have sent us to make Omo. So we can say therefore we do owe Bidco X amount of money. So we can say therefore is credit of the payables account. Great, that's good, Hannah. Okay. I hope Marvin is clear. Hope that's clear, Marvin. Okay. You credit the payables. You owe someone money. Okay. Okay. That's great. Okay. What else? Let me check.
Like.
Marvin, you have a question?
Yes, are the payables or suppliers same as creditors?
Yeah, the customer same as creditors. Yes, also the same as creditors. Yeah, it's the same.
So they are the ones who are previously called creditors.
Yes, they're the same person. Yes, it means you owe them money, which you are here to pay. Okay, at the end of a given time period.
Okay.
Yes, that's good. Yes. Okay. Let's take another entry here. You're done purchase of materials. No, assume. No, actually, let's go back to the question. This purchase was made on credit. Yes, on first. Okay, so but have we done that? I think you already done that. Okay, this part already. But either way, if now, okay, the purchase was made on 1st of September, you've done the entries here. Okay, now on, let's say on 1st of October, we pay now. Okay, and we pay through the bank. Okay, payment of the amount we owe the bank, we owe the supplier, as at 1st of September is paid through the bank. Okay, so the payment has been made through the bank. Okay. So on 1st of October, we pay the supplier the amount we did owe them for the purchase that was made on 1st of September. Therefore, what will be the entry? What will be the debit? What will be the credit? So you're paying now. You're paying on 1st of October. You're paying the amount for the goods. Okay, you bought on credit on the 1st year, on the 1st of September. So what will be the entries here? That should be quite easy, I guess. Hirani.
Yes.
Yes.
Like since we are paying through bank,
Mm-hmm.
it should be credited.
The bank should be credited.
Yeah, I think.
Get it? We therefore credit the bank, okay, because we are making a payment, okay, so therefore credit the bank account. I agree. Debit?
Yeah. Debit. I'm not sure about the debit. I'm not.
You're not sure about the debit?
Because I think because we consumed raw materials, so maybe that should be debited.
The raw material. Now, in case, let me just try to interpret what you're saying. Don't forget you bought raw material on credit. If now you debit, what are you trying to tell us is that the raw material are increasing. Okay. Are they increasing? This time around, you're not. You're not bought.
So is it?
Is
it the sub?
Is it there?
Is it the supplier's account to be debited?
Yes. Yes. You debit supplier's
account.
Yes, you debit the supplier's account. Okay, because now you're paying them. Don't forget here on 1st of September, you did credit the supplier's account. Okay, the payables account. Okay, you did debit. You did credit then. Okay, because the amount you are owing the person, the supplier, was increasing. However, now you're paying them. You're paying them the money. Okay, therefore the amount you owe them is decreasing. That's why therefore you debit the supplier has the payables account. Okay, thank you, Hirani. That's what you meant to do. Okay. Okay. Questions over. Don't forget, in case you have a question, ask. Okay, don't go to the next step without having understood the first steps. Okay. Okay, that's great. Paying the payables, I think you have mentioned that. So you're done this, paying the payables. Wages, okay. Wages. Let's go now to the wages now. Okay. So here, let me try to throw a twist, because now in the same thing that we'll be doing, okay, assume now on 1st of September, okay, we do pay our employees, okay, and pay them at the end of the month, okay. So here the salaries of the employees, okay, the total amount is, let's say, 10 million. 9 million of the 10 million is paid the same month, okay, it's paid through cash. However, okay, so this is paid in the month of September. Let me call this is September. The month of September, okay. So it's paid in the month of September through cash, okay, or through bank, okay, the same thing. However, the 1 million here to make the 10 million, okay, is not paid in September, but paid in the month of October. You get it, okay? So okay, this, let me call this that first. How many days do you have in September? I'm not sure. Okay, yeah, 30 or that first. Okay, no, let's say 30 days in September. Okay, so on that day of September, okay, we pay employees. Okay, 9 million. We pay for the employee. The amount we owe the employee is 9 million. That is 10 million. We pay 9 million. The other 1 million is not paid in the month of September, but paid for in the month of October. Okay. The question is, therefore, when it comes to accounting on that day of September, okay, what to be the entry? What to be the debit? What to be the credit? Do you get the concept? You owe the employee 10 million. However, you don't pay the entire 10 million the same month. You pay 9 million in September. The other 1 million is paid a month later. Now the question is, okay, what should be there for the entries here? Take a minute to think. Pick one of you, tell us.
I had an idea previously, but
Yes.
I'm not sure if it's the correct one.
Tell us the idea you have.
So when you have the 10 million is when it's first paid, then we debit, I mean the payables.
So debit payable.
Deni imeongezeka.
By how much?
Then because this, wait. When you pay the 10 million, that means cash is left our account. That means we have to debit the
what account do we debit?
Okay, I'm so confused right now.
Okay.
Let me just clear my mind, then I'll answer the question.
Okay, fair enough. Take a breather. Irani.
So I think the cash should be debited and salaries to be credited with 99 million.
Okay.
Then the remaining 1 million, which is in the month of October, to be dealt with in that month. For September, we just account the 99 million each.
So the account, how will the account appear in the month of September?
Cash debited with 9 and salaries credited with 9.
Okay, so the question is that therefore, how would we? So this 1 million just goes to the air, or what are you saying? How do we account for it?
The 1 million is later paid in October.
I agree.
So
okay. But in the books of, don't forget, it's like, let me give you an example. The salaries, the company pays you every month 10 million. But this month, because the company seems to have not enough cash, okay, they pay you 9 million. Then they tell you the extra 1 million we are going to pay you in the month of October. You can scenario. But the amount they owe you is 10 million. So they have paid you 9, they remain with 1 million. Do you get that case?
Yeah.
So how do we account for the 1 million? Because they still owe you 1 million, isn't it? As an employee. So they pay you this 1 million in the month of October. So how do the company treat that in its, how do it appear like in the books of the company? But that's a good attempt, Hirani. Moses, back to you.
So I think the 1 million will be carried forward to the month of October. So in the month of September, it will just be the 10 and the 9 million.
Basically, account for it, isn't it?
Yeah.
So it has to balance.
Oh, it has to balance. Okay.
It has to balance. It has to. Always, there'll be the debit side and credit side must always be more or less equal. In short, therefore, the balance must be equal. If not, then there's a problem somewhere.
Okay.
Yes.
I have a question. You said that there is a mistake with what I had done.
Okay, so what have you done before? Okay, I forgot.
I had debited the cash account with the 10 million.
10 million, huh?
And credited the salaries account 9 million. And wages and payables at 1 million.
At 1 million, okay. Agreed. So some areas of what you actually have done are correct. Some other areas they are not correct.
Okay.
Yeah. One of the areas that is correct, I agree that you owe people money. Okay, there's a payable. Okay, which means therefore you have to account that this 1 million which you owe the employee, which you have not paid, you have to pay it in the month of October. Yeah, that's a payable. Therefore, that's again be a wage payable. Okay. And seeing this is a liability, since you owe people, you have to pay, therefore, as you can see, therefore, is a credit entry. That's why you can say, therefore, this is a credit entry of 1 million. Therefore, this entry is very correct. This one is very correct, okay? So that in the month of October, okay, you're going to be paying the 1 million, okay? So the 1 million is payable in the month of October. So it's a payable, that's what I'm suggesting, okay? So the 1 million is a payable, which you'll be required to pay in the month of October. So here it's very correct. So here is where you have issues here. So here it is very correct. Okay, I think now this should be a bit easier for the rest of you guys. Moses, back to you. Moses, your hand is up, or make it a mistake?
It was a mistake. Sorry.
Okay. Someone else here. James. James.
Yes.
So that's what you think.
I think the 1 million will, I think, credit it.
Yes, which is okay. Like the way Moses has done here, it's very correct. Okay, but the 1 million is going to be a credit in the wage payables account. That's okay. So the issue is on here. I don't know whether you can see my screen. The issue is here.
Yeah, I can see it. Yeah, I see.
This is where the issue is.
Yeah.
So how do we take care of that?
Oh, the 10 million. Since it's salaries, I think we credit it.
Okay, by how much?
Since you've only received 9, so 9.
9 million. Okay. And the debit?
I'm not sure about the debit.
Okay. Don't worry. Hannah, you seem to have an idea.
We debit the wages and salaries, 9 million.
Wages and salaries. Okay, salaries, 9 million.
And then credit the cash, 9 million.
9 million.
And then credit liability, wages payable,
Okay.
1 million.
Okay, this gives us 9 million. So the credit side has 10 million. Debit side has 9 million only. I agree with what you see that there's a bit that is correct. However, it is not balancing. Can you see that?
Yes.
You can see that because the wages here is 9 million. The credit side of it is 10 million. So you have 1 million hanging somewhere. But you've done quite good there so far. Anyway, so let me just give you, because at least Hannah has given us some more lights, okay? The entry will be like this. So debit side, don't forget here, this is an expense to the company. You have to pay the employee the time. This is salaries that you owe the employee, 10 million, okay? Therefore, that's going to be therefore salaries, expense account, salaries, wages, whatever you want to call it, okay? Expense account, you owe the employee money. How much? 10 million. How do we treat it? We pay through cash. How much have you paid through cash? 9 million. What about the balance? Okay. Credit, the wages payable. You have to pay this money in the month of September. How much? 1 million. 10 million. 10 million. That's what you're meant to do. Was you owe the employee. When was this money meant to be paid? It was meant to be paid in the month of October. Therefore, that's an expense side of the company. Okay. You can call it the wages expense account, 10 million. However, you're not paying the entire 10 million today. Out of cash, you're paying 9 million, and the other 1 million, it will be payable, it will be paid by the company the following month, the month of October, as 1 million. That's what you're meant to do. Don't forget, it has to balance. If it doesn't balance, then something is wrong somewhere. Moses is clear.
Not quite.
Don't forget, you cannot debit cash, because debiting cash means the cash is increasing. In reality, is the cash increasing or decreasing? It is decreasing. So that's why maybe you're here, you had this here's an issue. You cannot debit cash here because the cash is not increasing, it is decreasing. So you can't debit, you have to credit. Okay, that's why therefore you had an issue here. Okay, then this is an expense account. The expense is increasing. So in case if you remember, just refer back to our mnemonic here. Debit expense if it is increasing. If you credit as we've done here, you are saying it is decreasing. Is it decreasing? No, it's not decreasing. The salary, we need to recognize the expense of 10 million. So you cannot credit account, you cannot credit that with the credit here, therefore. So it can only be a debit. If it was a debit, like the way maybe what Tana was telling us here, okay, yeah, that's there. It makes some sense, okay, because the expense, the salary is getting paid, it should be paid for in the month of October, in the month of September, okay, and now we only paid 9, and the balance of 1 million we paid later on, okay. That's why you mix them up here. That was the main problem here, okay. What is debit? What is credit? Okay. You debit cash if the cash is increasing, but it's not increasing, it is decreasing. Okay, that's what you can see here. We are going to credit cash. It is decreasing by how much? By 9 million. How much should you have paid the month of September? 10 million. That's the expense. Okay. However, what about the balance? The balance is yet to be paid, so the company you have to, in short, accrue it to the next month of 1 million. So therefore, maybe in the month of October now, okay, so this was September. In the month of October, let's say when they're paying, okay, the entry will be, okay, we had payable here, okay, we owed money, 1 million, okay, so debit, credit, okay, we are paying through cash in the month of October, okay, we pay the 1 million, so the cash is decreasing. So here you have cash decreasing by 1 million. Don't forget, payables is decreasing because we are paying, okay? So once we pay the employees money, okay, this 1 million, going forward, we won't owe them 1 million, okay? Because we have paid for it. That's why, therefore, it'll be a debit entry here. So wage payable of 1 million. Moses? Hope it's clear.
Yes.
It's clear.
Yes, it is.
Yes, you're sure?
Yes, thank you.
Okay, okay.
Yes, yes.
Yvonne?
Yes.
It's clear so far?
Yes.
Okay, let me see how clear it is by asking you a question. Okay, let's go back to where we were. Let me think of this. So on 1st of September, okay, the company makes a sale, okay, sales on credit, okay, let's say worth 10 million. Okay, so on 1st of September, the company makes a sale on credit of 10 million. Okay, so what would the entry? I think we have already done that. Okay, that should be easy to make. Okay, what should be the entry? Okay, it makes on cash. We make it easy. On credit, like let's say it's made on credit. What's the entry here? Debit, credit. Yvonne, this one we've already done together. Yvonne, are you there? Hey, Yvonne. I think I will be throwing you out of class now. Because I think, Yvonne, we were together a few minutes ago. Now you're away. Anyway, Yvonne, I think you're now on.
Yes.
What will be the entry? And by the way, you don't have to get it right. The idea is that we are here to learn. So don't shy away from getting it wrong. Don't. Okay, we're here to learn. Okay, anyway, Yvonne,
On the credit side,
Mm-hmm.
we put the sales.
Sales, okay, 10,000. Mm-hmm.
The debit side,
Mm.
the creditors.
The creditors, okay, debtors, okay, these are the called debtors. Therefore, you're going to debit the receivable, okay, also the so-called debtors. Okay, this one we did it here. We have done it before. Not that something new. Where was this? Yeah, here it is. Okay, where is this? Yes, here it is. This one you did it already, so it's not something new. We have done this already. Okay, back to you, Yvonne, because that was not a question. Okay, now assume, okay,
Yes.
okay, so on 30th of September, okay, the goods that were sold to the customer, okay, the customer says that he does not want this, although this would have an issue. Okay, maybe they were of poor quality, so the customer is returning the goods back. You get the concept?
Yes.
So the customer is returning, okay, some of the goods which we sold on 1st of September. So this is goods returned. Let me just call it. This is goods returned by the customer. They were made on the goods made on 1st of September. Now the question is, how do we therefore account for the goods that have been returned on that 30th of September? So
I think
go ahead.
I think on the debit side, it will be the goods returned.
Okay, goods returned. And
on the credit side, it will be for the customers.
The customer, the data.
Yes.
Okay. And that is it.
Yes.
Okay, let's get Talu.
So I have a question.
Sure.
When the goods are returned, are they being returned and then the money is going to be refunded, or?
Yeah, okay, let's make it. Yeah, the company has to refund the money. Yes, even complicated. Yes, you have to refund the money to the customer.
Let me try. I think you'll debit sales return.
Debit, good return also.
Sales return.
Okay, so debit. So what has happened here? So debit, just a minute. Okay, this is from Talu. Debit, goods return.
So, and then credit cash.
Credit cash.
Yes.
Okay. No, actually, this entry now. Okay, I agree with what you've done so far. It's okay. It's correct. Okay. However, the entry here has multiple entries. Okay. There are so many other accounts that should be affected. Okay. Which we need to take care of. Okay. Actually, I think someone had somewhere. Let me see. Which was. Okay, seems to be no one. So here, I agree that this entry is okay. Okay, that you're going to debit. Okay, maybe the goods return. Okay, or it's going to go back to the finished good. Okay, to the finished good account. Okay, that's okay because it is increasing. Okay, it is increasing. The goods you have in store. Okay, are increasing because you have received the goods that you sold previously. Okay, therefore good return. Okay, also you're paying the customer. Okay, you're paying the customer, okay, which means therefore you're going to credit the account of cash. But in short, you're refunding back the money. Okay, so the cash account of the company is decreasing. Okay, no, actually, no. Here the sales were not on cash; they were on credit, because here the sale was on credit. Okay, but that would be correct if the sales were on cash. Okay, that would be very okay. However, here, okay, there's no refund. So let me actually, okay. If there was a refund and maybe the sales was on cash, then this actually is quite okay. Okay. Now, if we go back to our original example where the sale was on credit, it was not on cash, Because don't forget, the refund can only occur if the company made, if the customer has already paid. Okay, so let's ignore this assumption. But it's very okay here. If the sale was on cash, okay, if the sale was on cash, okay, that's really okay because you're going to decrease the cash account. Okay, quite okay. Then, okay, and that is it. Was the return? Yeah, so that's quite okay. If the sale was on cash, this is sale that was on cash sales. Okay. Now, if we go back to an example where, okay, the sale was on credit, okay, can't remember who gave us this answer. No, I can't remember who it is, okay. Then, of course, the company goods return, the company goods or finished good account will be increasing. Therefore, we debit. Right, okay, okay. If that since now, don't forget here, what the entry that you made on 1st of September, we did debit the receivables account. But now, okay, it is decreasing because they don't owe us money. Okay, why? Because they have returned the good back. Okay, therefore, since here it was a debit, what do we do here? We do a credit. Okay, therefore this is okay. But if the sale here was on credit, here if the sale was on cash. Okay, so the two people gave us that answer is quite okay. Okay, but you have to be careful. Was it on credit or was it on cash? Okay. Great. So that's on the accounting metrics because you will be told. Okay, I think I'll give you an example from a past paper. Okay, where you're told where do we debit, where do we credit. Okay, and that's why I want you to know these entries because if you don't know the double entry system, of course you're going to find it very hard. Okay. If I know you can make a note here. Okay, payment of the expenses. Okay. Of course, you're going to therefore debit that expense account. You're paying for the wages, therefore you debit therefore the expense account. Then of course you credit the cash or you credit. Okay, the amount. Very easy. Now let's do an example. Is it clear by the way? Just confirm from someone who have not spoken today. Jay.
Yes.
It's clear.
Yeah.
Okay, answer this part now, Jay. Now this is a question that has appeared in exam. Okay, so this is an exam question. Okay, so DR means debit, CR means credit. So Jay, take a minute, tell us how you, what will be the answer here.
Maybe D.
D. What would be the double entry for payment of wages to the employees? Okay. D. That's from J. Let's get someone to verify your answer. Ishmael. Ishmael.
D.
D. Okay, that is from Ishmael. Okay, last confirmation. Yes. Christine.
Yes.
Do you agree with J and what was it? Do you agree with J? The answer is D.
Yes.
You agree?
Yes.
Okay, Anne, do you agree?
So I'm unsure.
Sorry?
So I'm not sure.
Okay, so what? Because you have to answer. This is an exam, assume. So you have to give an answer.
Maybe B, I think.
B.
Yeah.
Yes, and answer is B. Answer is B. Okay, answer is not D. It is B for boy. It is. Don't forget here. You're paying. I think you have just mentioned here. You are. Let me just take you back to because you have discussed this. You're paid for wages. Where was wages? There was wages. Okay, salaries. Okay, first payment of raw material. Okay, I think we did wages somewhere. Okay, wages, payment of wage. Okay, more or less here. I think it should be like here. Yes, here it is. You say that if you're making payments, what do? You debit the wages account, which we did, or do you credit? You credit the cash account, which we did here. If going back to our debit wages, credit cash, we have this. What we discussed this. Debit wages. This is an expense. This is an expense account you want to debit. It is increasing. That's why you're debiting it. Okay. What's happening to cash? Cash is not increasing. So you cannot debit cash. Okay. You can't debit cash. It is not increasing. It is decreasing. So C and D are out. Because if you debit cash, what are you trying to communicate? The cash is increasing. It's not increasing. You're paying your employees. The cash is not increasing. It is decreasing. So it can't be C, it can't be D. Okay. Then since the cash is decreasing, therefore it comes B. Okay, you can see here is debit cash. Okay, so you're making me to get worried. Okay, so let's show another example here. Yes, James.
I think B.
B for boy.
Yeah.
Okay, what should be double entry for purchase of a car on credit? Okay, one entry is okay, one is wrong. Hirani,
C.
correct?
C.
So C.
C, yes, the answer is C. Okay, don't forget the car was bought on credit, not on cash. Okay, therefore the cars are increasing. The motor vehicle is increasing. Therefore, debit cars. Okay, however, it was not on cash. That's why B is wrong. Okay, it was on credit. Therefore, you have to credit the garage, the person who made a sale to you, which you see you are yet to pay. The answer is C. Okay, and the last one. Joshua had a question. Sorry, Joshua.
Yes, I have a question. How come we have a garage, but in the question, as in the word garage inatokea in an account for garage? I just not understanding that.
The garage is more towards who is supplier of this particular commodity? Who is the supplier of this car?
Oh.
Yes, no, this is a supplier, okay? They can be used synonymously. It can be garage to represent the person who supply the car. It can be, let's say, Toyota Kenya. All that means, therefore, is one and the same term. But the garage here represents the person who made the supply of the car.
Understood.
Clear? Okay.
Yes, yes.
Okay. This example, okay, what's the answer? Don't forget, this is a past question, so I hope you are getting note of, okay, because that's why I'm going to ask you these questions.
So I think it's A.
Which is
Yeah, A.
okay. What is the double entry for payment of an amount owing to a supplier? So you owe the supplier, okay? So now you're making a payment, okay? So first of all, what was the original entry? For this, for example, okay, you bought goods from supplier with the month of September. Now you're paying the supplier today. So let's begin. What was the original entry? Inani?
So it can be D.
Can be D, okay? Okay, so let's first begin. I agree, okay? Answer is D. Answer is D, okay? But that is going to begin based on the original entry. Don't forget, the original entry is when you made the purchase, okay? What was the amount you did, for example, debit, okay? The material account, okay? Whatever the supplier gave to you, and it was a credit of supplier, okay? That was the, in quote, the original entry, okay? Like the way it is here in part, no, where is it? In C, okay? So the C is the original entry, okay? C is the original entry, okay? The original entry, okay? You bought purchases, you made purchases from the supplier, okay? You didn't pay on cash, okay? That you can see, therefore, we did credit supplier. However, now we are paying, okay? Now we're making the payment, is therefore the reverse, okay? Therefore, you debit supplier's account, credit, cash. Cash is decreasing. Cash is decreasing. As you can, therefore, D become, therefore, our answer. Any question? Okay, so if there's no question, then I guess we can call it a day here. Okay, we meet on Tuesday. We pick from there. Don't forget. Okay, essentially you're not going to be asked to prepare financial accounts here. Okay, but I think you'll be asked in financial accounting. Okay, however, you must get to know the double entry. Okay, you must get to know the double entry. Okay, these are free marks, which of course you want to get in the exam. Okay. So if there's no question, then I guess we can meet on Tuesday in the morning. Okay. And by the way, Anne, you have a question before I conclude.
So I kind of had a problem like accessing the notes.
Mm-hmm.
I really did. Pardon?
What problem?
So you know how you told me to like click on the general MA1?
Yes.
So I did that and it took me nowhere.
Hey. Mm-hmm. Ian, do you face the same problem?
I do.
No. It's okay.
What you say? Okay, no. Yeah. Someone else has the same problem. Okay, so this is who? So Anne, I don't know. Okay. Let me just.